Alright, as for next formula is about saving ratio, where if you look at the textbook, it will say saving divide with gross income, but this is incorrect. The correct one, this is some kind of typo error. Therefore, the correct one is net cash flow divide with the gross income. So the net cash flow, alright, is 159,000 here. Okay, I hope you can see this. The net cash flow of 159,000 divide with the gross income, that is also from cash flow, total inflows, that is 350,000. Alright, so here it is. Okay, 350,000. The minimum of saving supposed to be 10%, but as in this client is 45.42%, which is considerably very good. The next is liquid asset to net worth ratio, where the minimum is 5%. Okay, so as in this formula, it is quite straightforward. The formula is where cash or cash equivalents divide with net worth. Alright, therefore if you look at the cash and cash equivalent net worth statement, the figure is 105000. Okay, it's supposed to be here. Alright, divide with net worth, that is 610000. Here is the figure. Okay, 610000 of the net worth. So you just divide and you compare with the benchmark and give comments for the status of the personal ratio of your client. The next ratio is about debt to asset ratio. This is also quite straightforward. Total debt divide with total asset. So total debt, you can get this from net worth statement, current liabilities plus long-term liabilities. So if you look at this net worth statement, you can get 230,000, okay, plus with 80,000. So the total will be 310,000, while the total asset, okay, is all comprised of cash and cash equivalents, investment asset, okay, as well as personal use asset. Okay, personal use asset. Therefore, the total is 920,000 here. Alright, so this is the total asset you include in the formula. The next is about debt service ratio, or sometimes people call it as financing service ratio. In this formula, it is quite complicated a bit. If you look at the formula I show you here, debt service ratio is total monthly loan repayments divide with monthly take-home income. So I show you the calculation here, where how you can get the total monthly loan repayment is where current liabilities less income tax payable, and then you plus with long-term liabilities, okay, and then divide by 12. Alright, so this is current liabilities, that is 80,000. You look at the statement of net worth, here is 80,000, okay, minus with income tax payable. Okay, income tax payable is 65,000 here, and then you plus with long-term liabilities, that is 230,000. Long-term liabilities is here, okay, and then you divide with 12, okay, because all of this information are in yearly information and we want to calculate for monthly, so that's why we need to divide with 12 months. So as in this case, you can get 20416 as a monthly loan repayment. Okay, so you already have information on monthly loan repayment, but now it's time for you to calculate the monthly take-home income. As for this, please pay very serious attention, because as for this monthly take-home income, the calculation is slightly different than what you have in the textbook, because as I just want to highlight that the formula in the textbook, there's an error or typing error over here. As for the monthly take-home income, the formula is total cash inflows minus employee EPF contribution minus income tax payable and divide with 12, which means, as in this case, we have to exclude employer contribution, okay, from our calculation. Alright, because in our take-home income, employer's contribution is not deducted from our salary, okay, only employees EPF contribution being deducted from our salary, right? So therefore, for monthly take-home income, this 350,000 is the total inflows minus with cash flow, not cash flow, this is employee contribution. You get this figure from the here EPF employee portion, that is 15,000. Alright, so minus with income tax payable. Alright, you have an income tax payable of 65,000 over here, and then you divide with 12, so 21, and then you calculate the new figure, okay, and it become the monthly take-home income. Alright, the next is non-mortgage debt service ratio. For total annual take-home income, you already have this figure before, okay, so this is the formula, but you need to divide with 12, okay, because as for this, it is monthly, so that's why you need to divide with 12, but as for this, it is yearly, annual, so 350,000 minus 15,000 minus 65,000, that's all. You don't need to divide with 12. And the annual non-mortgage loan repayment, it is, you have to know that non-mortgage means that we have to exclude housing, because housing is a mortgage. Therefore, here is the formula for non-mortgage loan: credit card outstanding plus car loan outstanding plus personal overdraft, where all of this figure you can get from the net worth statement, okay. The credit card outstanding is 5,000, car loan outstanding is 65,000, and personal overdraft is 10,000, so total is 80,000. You have to exclude housing, okay, because housing is a mortgage loan. Alright, so the recommended is 15%, and as for your case, you have to compare with your client, okay, whether it is in line with the benchmark or below the benchmark. Right, next is about net investment asset to net worth ratio. This is quite straightforward. Total investment asset divide with net worth. Net worth of, obviously you look at the net worth statement. The total net worth for this client is 610,000. All right, and for the figure is here 610,000. Okay. And then for the total investment asset is cash and cash equivalents plus investment asset. Okay, so cash and cash equivalent plus investment assets, so 165k plus 105k, so the total is 270k. Alright, so the last one is solvency ratio. This is the net worth statement, also from total net worth 610,000 divide with total asset. Alright, 920,000, it is here. If you look at the net worth statement, total asset is 920,000. So this will be the ratio for the solvency for your client. So as for this personal ratio, you have to calculate the ratio for each for your clients and compare with the recommended benchmark and give recommendation towards what will be the outcome from your personal ratio calculation.